Thank you. Let's call our meeting to order. I think everybody has their. Does each member have a folder with the bill that we're gonna be hearing? Okay, everybody has a folder. Chairman Nix, could I ask you, what is your number down there? 29. Would you say a prayer for our meeting?
Let's pray. Lord, we thank you for the blessings you give to us. We thank you for the blessing of service. Lord, just help us now as we hear this bill to be open to the ideas that are there and make the decisions that would be pleasing to you. Again, we thank you for our many blessings. In Christ's name, amen.
Thank you, preacher. And I don't know how many committees have two preachers on them, but you can get prayed over at will. Welcome to Banks and Banking 2017. First, of course, I see with our cheat sheets on our pictures, I need to update mine to reflect the recent weight gain. But that is me as chairman, Greg Morris, although it may not look like me if you see that. I want to welcome Lee Hawkins as our vice chairman. And again, Chairman Nix as our secretary. Now, I don't know of any other committees that has a chairmanship of an important committee like ethics still as secretary of a committee, but I started it either reflects a lot of favor or a lot of concern that things may go sideways, but I'm glad to have my officer of the committee back. And we have some new members. And if I miss somebody, let's Representative Alexander is new to our committee. Representative Elam is a new member of our committee. Mr. Mitchell is here. Thank you. Representative Ridley and Chuck Williams, who is has a background in banking as well, so it'll be great assets to the community, to the committee. So welcome. We are first. Let's. Everybody should have a copy of the rules that we were hoping to adopt before we have any business. They're pretty straightforward, and if you have any questions concerning them, I'd be happy to hear them, but if not, I would like to adopt the rules. We got to move. Do we have a second? Any discussion on the rules? All those in favor of adopting the rules, say aye. Aye. Any opposed? No. Thank you. The rules have passed. Okay, today we are going to have a hearing on House Bill 143, which Representative Williamson of our committee is going to be happy to, I believe, give us a rundown of what the bill adds to the code or what it deletes, so that the committee, and again, this is just a hearing, and we'll have a vote hopefully early next week on the bill. So, Representative Williamson, if you're ready, then which mic is that? I can't put my glasses on, I can see. If you're ready, proceed, sir. Explain the bill.
Thank you, Mr. Chairman and members of the committee, especially you new members. Look forward to working with you collaboratively over the remainder of this session. What we have for us today is House Bill 143, and it's LC 39148. It's the department's annual housekeeping bill, the Department of Banking and Finance. And for those newcomers, I might be referring to the DBF, which stands for the Department of Banking and Finance. Just a real quick overview for the new members. You know, the Department of Banking and Finance is in charge of our state chartered financial institutions, the largest of which happens to be SunTrust Bank, is a state chartered. The much larger names we know, the Bank of Americas, the Wells Fargos and such, they're all nationally chartered banks. And there's always this healthy tension in our state between our national chartered, who are federally regulated, and our state chartered institutions, which are near and dear to my heart, because I believe that those people providing the financial services to our citizens of the state of Georgia that are closer to these institutions, that understand the communities from which we hail and which we serve, they have a better feel of the ebb and flow of what's going on in our communities. That's nothing derogatory against our federal chartered institutions. This includes our credit unions affiliates as well. They are serving our citizens in a very similar capacity. I just know a little bit more about the community banking space. That being said, I'm going to go through some of the general talking points about this bill. It is, frankly, the third year in a row that I've been honored to be able to carry this legislation as part of a multi-year effort of a code review task force that's where the financial institutions, on the one hand, the credit unions and interested parties in that space have met over and over with the Department of Banking and Finance regulators, talked about their concerns about how banking can be more efficient in the state of Georgia, how they can eliminate unnecessary regulatory burdens on their institutions, streamline the process and dealings with the Department of Banking and Finance, and thereby serve their union or their members more effectively and at lower cost. Same thing's has been going on a multi-year basis with the state chartered banks. This bill also touches on the our mortgage service industry, as well as not the money service business. They're not being touched on there. What am I missing? I'm sorry, that's right. We're going to talk about trust companies, which hadn't been really much of a discussion in Georgia for a long time. And I'm talking about financial institutions that are just chartered for nothing but fiduciary trust purposes in Georgia. So by working on this multi-year task force, this is really the it's not quite as many moving parts into this legislation this year as it was, for example, last year when this body, the General Assembly, defined for the first time such 21st century terms as virtual money. We talked about that at length last year. This is more nuts and bolts, sort of code cleanup, and going to do a few other things to make commerce a little bit easier with less regulatory burdens on the citizens of Georgia at the same time. So it contains proposed legislative changes that have been identified internally or suggested by industry over the course of the previous year. It does come from these code review task force, and in Georgia, this legislation is supported by the Georgia Bankers Association, Georgia Credit Union affiliates, and the Community Bankers Association, as well as, I might add, the Mortgage Bankers Association has no objections at all to this legislation. It covers a number of areas, but I'm going to just touch on some of the highlights before we get into the meat of the legislation. There are a number of artificial restrictions precluding chartered trust companies from providing fiduciary services to Georgia citizens, and thereby it's limiting consumer choice and discouraging trust company growth in our state. Georgia law currently states that for a trust company to do business in the state of Georgia, they have to physically be contiguous to Georgia, so that just limits it to our sister states around us. Well, in this 21st century environment, that's sort of ridiculous. If a trust company's domiciled in the state of New York and they want to do business here, they're going to seek approval by State Department of Banking and Finance. It doesn't matter if they're South Carolina, Florida, Alabama, Tennessee, or North Carolina. We're happy to have New York here as well. So we just want to eliminate that artificial barrier for trust companies coming in doing business in the state or being approved by the department. But similarly, as a follow-up to that, we might, if these institutions can come in and feel a need for the citizens of the state of Georgia, we might as well be able to charter them from the very beginning. So granting a charter approval for them to be domiciled in the state and operate in the state is another goal of this legislation. Am I stating that correctly?
You're correct.
And by the way, this is Bo Fears, who's the attorney for the Department of Banking and Finance, and he's testified the last couple of years in this committee. The bill would also allow the department to issue administrative subpoenas to third-party service providers in the same manner that is currently allowed by the Secretary of State, the Securities Division, and the Insurance Commissioner's Office, and the Georgia Professional Licensing Board. So whenever any of us see anything about administrative subpoenas, our antenna go up, but I just want to point out to the members of the committee that this is not unusual. Our other state entities that I just described already have that power. It's also going to clarify that Georgia banks have parity with national chartered banks in facilitating bank transactions on Sundays as well as holidays. Our current Georgia law, I'm going to back up, the federally chartered institutions, their law preempts our state law automatically if there's any kind of conflict. We did pass legislation last year that grants us the commissioner parity powers that when he sees an inherent competitive disadvantage that state chartered institutions are being granted over, I'm sorry, federal chartered institutions are being granted over our state chartered institutions, that by regulation he can, is that the right word, regulation, or by order? By order can bring us into parity with those federally chartered institutions. So if you take a real, and I'm not an attorney, but a real strict reading of the current Georgia code, technically everybody's violating the law on Sundays if we use an ATM card to withdraw money to put in the collection plate on Sunday mornings. Nobody that I know wants to stop that, but this bill would make sure that everybody understands it's not in violation of Georgia code, that we can continue doing business as we've all practically been doing business over the internet and using ATMs, but not only holidays, but Sundays as well. It's going to clarify that as an added convenience to their customers, financial institutions can collect a convenience fee for payments being made, and more often than not, these are going to be last-minute telephone payments. Now, if it's already written in a loan agreement that the institution can charge that additional fee to a customer, there's no discussion. You know, there's been an upfront discussion contractually between the borrower in this case and the provider of the money, and that can happen. But by saying that the state of Georgia says it's all right as well, as long as there is otherwise free ways to get your loan payments to the entity extending the credit, you can always do that. But what this will allow companies to do, financial institutions to do, is to, if they want to set up a telephone operation where people can make last-minute payments before their big late fees are kicking in, then it makes sense to pay $10 to save $50 late fee, and they don't have to do it, but this gives financial institutions the flexibility of meeting their customers' needs and thereby keeping down their collection costs and helping customers not get further behind if they're heading in that direction. And I'm just talking about regular banking transactions or mortgage payments, if the case may be. Yeah, if you don't mind. The bill, excuse me, Mr. Chairman, I just overheard the question. The bill covers another of the areas I would also like to touch on a couple of other highlights. There are a number, and this gets back into the trust company thing I made my opening remarks about. There are a number of artificial restrictions about chartered trust companies. I've already explained that to you, but this would allow the department to remove those barriers. Trust companies would be eligible to come in and receive charters once again in the state. They would have to meet stringent tests and have insurance in place and have substantial lines of credit or letters of credit up protecting the customers of those entities, and it would put us in a competitive posture to be able to add those services to the citizens of the state. I believe, Mr. Chairman, that kind of covers the highlights of the bill. I'm sorry, there is another change. We're looking at restructuring the legal lending limit calculation for banks. It is a very complicated, sort of a moving target for those bankers in the room that know what I'm talking about. This is a collaborative effort between both the department and the lending institutions that have to do their lending legal limit calculations over and over and over. And it's sort of without getting into the weeds, it streamlines that process. It thereby eliminates unintentional violations and also, frankly, strengthens the safety and soundness of the entire banking system in the state. So, but anybody that's ever been through those tortured calculations, this is a very good thing. Finally, it's a change related to the deposits at credit unions. It's sort of a technical in nation, but credit unions If they accept we're all familiar with the Federal Deposit Insurance Corporation, which is bank funded, that protects deposits at banks, but the credit unions have their deposits insured by what's the name of it?
The NCUA.
The National Credit
Union
Union Association. It's a technical violation if someone that's not a member of a credit union puts money in a credit union. That's a violation, or that member's deposits are not covered, and it could end up having an unintended consequence for the credit union to be put in that situation. So this clarifies situations like that. Again, this is something that credit unions have requested. So, well, that's sort of a long explanation about the general talking points. I'm happy to answer any specific questions in the bill with the aid of the banking attorney.
Well, now would be that time. Thank you, Representative Williamson. Who, 18, is that Representative Mitchell?
Thank you, Mr. Chairman. Representative Williamson, just for purposes of my understanding, I have what I believe to be two quick questions. Sure. Let me deal with the latter one first. Lines 135, actually 134 to 144 is new legislation, new language. Am I to understand that state chartered banks are not allowed to charge a convenience fee as presently stated in law? And if so, is there any parameters on the convenience fee? What sets the amount of the convenience fee? I assume that could be different from institution to institution?
Exactly, and I'm going to make a stab at it and then let Mr. Fears back me or elaborate if it need be. So as long as there's a free way to pay, a bank can't add a fee. But again, the best example I can think of is any financial, and I'm not just talking about banks, it could be mortgage service businesses or credit unions. If they go to the added expense of facilitating some other medium, such as a human interaction with telephone receipts, they can charge a fee, and that's between the customers. We're not telling them how much they can charge. It'd be stupid for them to charge $100 or whatever. They're doing it because they want to get paid. They're not doing that particular function to make more money. Again, if it's all about making more money, they wait till the late fee kicked in and then collect that way.
And this is new. And this is new language. They are not allowed to do that as of now.
So, Representative Mitchell, this is in response to a publication from the CFPB in December of 2015. And the CFPB, I think it was 2 mortgage lenders and maybe 2 banks that were charging this convenience fee. And the CFPB determined that that was a violation of the Fair Debt Collection Practices Act, not a violation of state law, but a violation of federal law, if either state law did not expressly authorize it or the fee was not included in the contract. And so what I think the department's view historically has been that this is a permissible fee, but this is to address that CFPB view or guidance that they've been issued to say, okay, here it is, state law expressly authorizes it. And then the protections to that fee are, they're incorporated in 13-1-15. And so one of the protections is the lenders have to give the borrowers a non-fee way to pay. In addition, the convenience fee either has to be the actual cost incurred by the institution to offer this service, or conversely, it has to be the average. So if I were to provide this service to, 200 people, this is what it costs, so then I can break it out that way. So that's the protections that are there. Does that answer your question?
Yeah, it does. I think I was familiar with CFPB regulations would suggest that is an agreement between the borrower and the lender, if it is expressly in their agreement,
correct,
then this would not be necessary.
Yeah, so I think what this is really designed, and I would assume that most lenders going forward will include that in their documentation, but say, you know, you're in year 5 of your note when that came out, right? And so for 25 years, that option is not going to be available to you. Now, I would assume most people will refinance at some time, but that's the rationale.
All right, and my other very quick question, page 3, lines 75 through 83. I was trying to follow that. And how is that any different from what you're doing now? What's the difference in that?
So I think I could give you the layman's answer, but I'm gonna let him give you the
Okay.
attorney answer. Go ahead.
Oh, okay. That's right. So currently how it's set up, the department has the ability to compel anyone to appear and, well, to require someone to appear to provide either testimony or documentation. If they fail to appear, we then have to go to Superior Court, ask Superior Court to issue a subpoena. If the Superior Court issues the subpoena, we then serve the subpoena. If they fail to appear, we then go to Superior Court to have them enforce it. What I am suggesting is we eliminate that step where we go to the Superior Court to issue the subpoena, so the department would have the ability to issue an administrative subpoena. In the event of noncompliance or the event someone wishes to challenge it, we then go to Superior Court and have it challenged. The department has this ability in the money service business section of the code as well as the mortgage section of the code. We just don't have it as it relates to supervision when it deals with our credit unions and our banks. As a practical matter, this is something that we would never use against entities that we regulate because we have the ability to examine and to investigate. Where this is really utilized is when we deal with third parties who don't want to cooperate.
Give some examples, if you don't mind, of the third parties that financial institutions might be hiring for their operations that this could.
Right, so I think that, you know, one example where we do use it fairly frequent, and when I say fairly frequent, this is something that on the money service business side and on the mortgage side, we probably use this authority maybe once or twice a year. Just so it's very rarely utilized. But the most common example is if we need to get information from a national bank or a federal credit union. We don't have jurisdiction over them. They, understandably so, want a subpoena. So if we're conducting a fraud investigation, we're trying to track it, they're like, we want to give you this information, give us a subpoena. So to me, this is where we would use it most frequently. Also, we do have, we currently have the ability to examine and regulate third-party service providers. And really where we're seeing is that's an area where we're developing, where we're putting more resources in both at the state level and the national level, really because third-party service providers are really getting into the IT space, so for data security type issues. So again, this could be something that we would utilize more frequently if there were some IT concerns or IT issues with the provider.
Thank you, Mr. Chairman.
Good questions. Representative Teasley down there, is that right?
Thank you, Mr. Chairman. Thank you, Representative Williamson, for bringing this bill. On Section 9, starting on lines 339 and following, I think I understand what we're doing here. I just want to make sure.
Okay, good catch.
We are, it appears to me that we are clearing up in language that a minor has to be 16 years old to have their own sole account, or they can continue to open up an account with a parent or other kind of legal guardian. Could you speak to that, please?
That's correct.
I did read your bill.
Yes, you did. At least you scanned it. So, under current Georgia law, any minor can open an account. Period. Well, not many banks, but correct me if I'm wrong, but any bank can, under current Georgia law, refuse to open an account.
Correct.
So if we're talking in hypotheticals, but if a pretty smart little 6-year-old walked in, wanted to open an account, the financial institution could help them out or refuse the business. Well, all of us want to encourage good stewardship with our children and grandchildren, to learn how to handle their money and be responsible and all that. So we don't want to do anything that would stop them from putting their babysitting money or their after school hours paycheck in a financial institution. But it's been my observation that most financial institutions encourage the parents to be co-applicants on the account or co-owners of the account, just to help the kid learn more about what's going on. But that's not what Georgia law says. And in an effort to, make sure that we're still providing these accounts to all of our youth, this law would clarify that they can walk in the bank, and at 16, it's their bank, nobody else, their money in the bank, nobody else owns that money but them. And but any younger than age 16, they would have to have a parent on the account. Is that a pretty
That's correct.
fair oversight?
I just want to make sure all three of my children opened up an account with me as their kind of co-owner well before the age of 16. So I just want to make sure we're touching that.
So what about the current accounts that exist now for those under 16? I mean, what would happen at that point?
My view is that they'd be grandfathered in so they would be permitted to go forward, but you just couldn't take on new accounts.
Okay. All right, I lost track of who, I think Representative Williams was next.
Mr. Chairman, thank you. Representative Williamson, just a point I want to ask about, starting on line 57 through 61, where we're talking about changes in capital levels subsequent to the filing of call reports. Really a question, I guess, more for the department, since traditionally bankers tend to think about equity capital in terms of percentages, if you will, rather than absolute dollars. With that language there, and I realize it doesn't say Tier 1 capital ratio, it says the common equity Tier 1 capital, which upon close reading would indicate that's dollars. But since we tend to think of capital so often in percentages, given that language, do you have any thoughts that this could be either good faith misinterpreted by the financial institution, or maybe other than good faith interpretation that, well, my equity capital went from 10% down to 7%, but that's not a 5% reduction, so therefore I don't have to recalculate? I'm just wondering if that language should be a little more specific, that is talking about a 5% reduction in the absolute dollar amount of capital, since we do use those terms from a percentage standpoint. Just a thought that jumps out at me.
Right, and so primarily, and that is an outstanding point. I mean, primarily what we were aiming at is a situation either where there's a capital raise or along those lines, so that we could, or conversely, a significant dip going down. We can definitely look at to see if there's any changes that potentially tighten it up.
I understand exactly where you're coming from, but I could see that someone could unintentionally or intentionally misinterpret that.
We could also tighten that up in rules too. I mean, that would be another way to tighten it up to prevent that unintentional reading of the law.
Thank you, Mr. Chairman.
Thank you.
It's a good question, Representative Williams. And I do want to know that you're the most seasoned banker in the room, and I'll look to you for any counsel and advice. Because would you not agree? I'm going to ask you. It can be a pretty tortuous calculation of this requirement. So it was an effort by the regulators and the affected parties to streamline it. So.
I understand.
Representative Ridley.
I had the same question he had, so we're on the same page.
Okay. Do you have any other question?
No, sir.
No, not right now. Okay. Representative Mitchell, you have another question?
Yeah, Mr. Chairman, I do, Mr. Chairman, which was inspired by a previous question on the line 340 on page 10, and I must admit, when I read that, I took that to mean in concert with an adult co-signer, simply being that would this law create the ability of 16-year-olds to therefore enter into contractual obligations in the state? As you probably are aware, at present Georgia law stipulates that you cannot enter in a contractual obligation in this state until you're 18 years old. I assume when a depositor comes to a state chartered institution, they're going to have to enter some kind of contractual agreement as to how they will operate or manage that account.
Representative, that's exactly the same question I asked. But it's my understanding that it does not expand the ability of a kid, age majority in the state of Georgia is 18, to be able to contractually do this. The fact of the matter is, and I'm gonna let the attorney give us the definitive answer, but it's my understanding the fact of the matter is that Georgia law allows minors to do this now with the financial institution's approval. This would just raise the bar to age 16, but I'm going to let him hit the finer points on this.
Right, so this would be my construction, and you're correct. Georgia law currently, by statute and by case law, prohibits minors from, well, a minor can enter into a contract, it's just not legally binding. They don't have the capacity,
Right.
correct? So we also currently have a statute that says a minor has the ability to enter into a contract with a bank, no matter what the minor's age, and have a bank account, period, end of story. They also have the ability in this to have a safe deposit account, period, end of story. Now, I would argue, or one could argue as a matter of statutory interpretation, that the specific controls over the general, and so this is a carve-out over what a minor can do in Georgia. So the General Assembly has, with this law, has decided that a minor, no matter how old, has the ability to open that account. What we are trying to do, or hoping to do here, is to put at least some sort of limitation on that we don't want a 12-year-old, 13-year-old, however, opening up a minor-only account. But if they are 16, you got the ability to drive a car, presumably you're going, you have the ability to go to work, that at that point you can open up an account, a minor-only account, with the bank's consent.
So that's how you arrived at 16, was kind of in line with the driver's license working? I mean, because that was a question.
That was, it was throwing a dart, but that was my rationale to come up with the 16.
Representative Williamson, a minor comes in, 16-year-old comes in, I assume they get a debit card with their account. They write out a check, use of debit card. Who ultimately will be responsible? Because the 16-year-old does not have the capacity to enter in those kinds of transactions and be legally held responsible for it.
I think you might hear. I mean, because I think that you allow them to have the account. So with their debit card, right, so that is their access to the account, they can utilize the funds. Now, who they're contracting with, right, so say the store merchant, if something were to go wrong, the store merchant, who are they going to sue, right? But I mean, you still, on some level, you have that problem now. So whenever someone who's under 18 goes to a store and buys something, whenever that happens, I mean, there is a contract created at the time, but that's not under Georgia law. That's not binding and enforceable now.
Wow. Emory just said, Representative Dominique said he's going to get his 16-year-old some cards and.
Didn't say that.
Thank you.
I don't think you can DBA as a 16-year-old. I don't think that's what we're
No.
we're putting
That's not
together
what we're
here.
attempting to do.
I think that's.
I
think that's
understand you understand the 16. That makes
I
sense. I
think
mean, my son works, and he always has more cash than his mama gives me, and he has an account.
I find that.
It's embarrassing. I have borrowed a lot of money
on
from
this
him.
committee today.
Yeah.
I had no idea.
Okay, let's see. Who was 14? I can't see that far. Okay, Representative Frazier.
Thank you, Mr. Chairman. Representative Williamson, is it not true that I support this bill and support our financial institutions across the state of Georgia?
Yes, ma'am, especially.
And is it not true that I especially support our credit unions? So I would like for you to turn to section 17. I do have clarity on this, but I would just like for you to let the committee know how on line 475, our credit unions, with the additional powers that we have now, and how they can receive funds just as financial institutions can. I just need a little bit more understanding right here on the third-party issue, because I thought that our credit unions already have that ability to issue on third-party payment services.
We're talking about line 417, is that what you said?
On page 14, 475 through 480.
475.
477, I think, to 480. Can I grab that real quick?
Yeah, please.
Representative Frazier, are you specifically referring to lines 477 to 480, that first paragraph?
Correct.
Okay, so this doesn't change any of the powers, this change right here. All it does is the entire, if you'll notice, paragraph 1, paragraph 2, paragraph 3, paragraph 4, on throughout, the tense was simply changed. So there is no change at all to the credit union's substantive power in this line.
That's good.
Yes, ma'am.
Thank you.
You're welcome.
I'm not showing any more questions. No more questions from the committee? Mr. Hagler, thank you. Sorry I didn't recognize Commissioner Hagler back here for banking department, and fees has already been introduced. Okay, we will, as I said before, if there's no further questions, we will look to have a follow-up meeting. We're not going to be here Monday, are we? So I shouldn't call a meeting Monday, should I? Yeah, okay. We'll try to get together Tuesday or Wednesday for a vote on House Bill 143. If there's no further questions, we'll be adjourned.
Thank you, Mr. Chairman.